Only 2 weeks ago, I decided it was time to start trading options. Of course, like anyone else, I've seen all of the posts over the internet where someone became a millionaire overnight trading options, where their call or put option was just so successful because of how much they can move, and I had some friends trading options, so I figured I would give it a shot. Today I'm going to tell you all about the top 10 things I've learned in the last 2 weeks trading options. So if you're just getting new to options as well, maybe you can fast forward your learning process and not lose as much as I did. So if you've watched any of my previous videos, you know that I love trading both crypto and Forex. I've been in these markets for a little over 3 years, and I'm profitable in them. I'm doing well. However, the volatility in each of them has been pretty low recently. I'm always looking for new markets to trade, new markets to explore, and so I figured options could be fun to give a shot. Now, from previous experience, I know that having a group of traders around me helps me learn faster, helps me grow faster, and helps me get to profitable faster. I find it extremely difficult to go on these paths alone, and so I joined into a Discord group to really get started on this. The group has multiple thousand members and multiple dozen leaders who are there to help you and trade with you every single day, always ready to answer your questions. And if you also want to learn to trade options, I'd highly recommend you join a group as well. If you want to join the one I joined, I'll put a link to it in the description below. So after my first full week of trading options, the major thing I realized is that it's so different from everything else I've been trading, from all of my other strategies that I had been using, that I can honestly say I almost feel like I started at a disadvantage. So let's get into what I mean by this by looking at what I learned. The first 4 things here were all of my learnings in the first week I had. Number 1, have an established stop loss. I am huge on risk management, and if you watch any of my past videos, you'll know that. I preach that risk management is the most important part of trading, but I come from other assets where I stopped out of trades at roughly 2 to 5% in loss, and even that 5% range is pushing it. I usually stop out much before that. However, with options, these contracts might be 5% in loss in the first 10 seconds of a trade. You can't really use those numbers, and so as a result, I wasn't sure where to set that number. I should have listened to other people on this who were giving me advice of specific numbers. However, I really didn't. My first week I kind of just went with the flow. I stopped out wherever felt right, and once I get through these first 4 tips, I'll tell you just how that went. You can see just how bad of an idea it was that I didn't have an established stop loss once I tell you the numbers. But first, number 2. The second most important thing I learned was to pay attention to low volume or open interest on contracts. Volume is the number of contracts that are traded, and open interest is the number of contracts that are owned. I really didn't even consider or look at these numbers the first week of trading options. As a result, I had quite a few plays that I entered where the contracts had almost no volume or open interest at all. As a result, even when these ran into profit, I couldn't get out of them. No one wanted to buy because, of course, there was no volume. And so by the time I was actually able to get out of these, even the ones that should have been profitable ended up being a loss. Number 3, take profit when you see it. Similar to number 1 here, where again, I'm used to taking profits around 2 to 10% on most trades I was taking. Typically around 3 times my risk is where I like to shoot for. I had no idea where to set this number with options. A lot of my trades ran a really good amount in profit, and I just thought they would keep going. Then, before you know it, these contracts fully reverse and end up way deep in losses. And number 4, follow the trend. I'm very used to picking reversals and trends. It's basically my entire strategy in crypto and FX. In essence, I'm looking for major support and resistance zones and trying to scalp bounces off of them. You can check out my other videos on what I do in those markets. In options, this is a bit more risky, and I found out it really doesn't work that well. Even if you get that 1% price bounce, you're still losing contract value due to all sorts of different factors like volatility changing, time changes, etc. Buying in the bottom of downtrends and trying to sell the top of uptrends is not going to work in options. So those are the 4 key things I learned in week number 1 of trading options. Now you're probably curious, how big were these mistakes? Did they really make a big difference? How important really are they? Well, as I preach in my other videos, I started this account with a very small amount, at least relative to what a trading account should look like. I only started trading options with $1,000. In my first week of trading options, I took 26 trades and 20 of them were losers, almost all entirely due to those 4 reasons I was just talking about. As a result, I lost about 50% of my portfolio in just 1 week. I was already down to $500. losers. Now, this didn't stop me. I just went over my notes, documented all of this, learned those 4 things, and moved on to the next week. So now we're at week number 2. How did I do this week? What did I do wrong? Well, to give you a little sneak peek, I took 20 options trades in my second week. Out of those 20, 12 were losers and 8 were winners. So compared to the previous week, this was a huge improvement for me. Going into week number 2 here, I had a very strict strategy in mind. I was going to take a 30% stop loss no matter what, and I had a profit target of 30%. Once I hit this profit target, I run a trailing stop loss of 10%. So basically, if I bought a contract at $1, if it went down to 70 cents before it got to $1.30, I would stop out. If we went to $1.30 before that 70-cent mark, this is automatically a winning trade for me. I set a trailing stop loss 10 cents behind, so that no matter what, I'm locking in 20% profit. I'll go through the 7 key learning points for this second week, and then I'll tell you just how the numbers compared to the first week. How much did I win or lose? Number 1, I made this same mistake in week number 1, and I'm documenting it again with even more detail this week, trying to catch a falling knife. I was looking at a chart with a huge red candle. The underlying asset had dropped about 10% within 15 minutes. I started to see the candle wicking, the volume slowing down, and I assumed we'd get a nice bounce right off the bottom there. As a result, I took a call option, and I actually did pick near the bottom of this candle. However, we only bounced about 1 to 2% before continuing down way further. My contract was slightly profitable after this, but not enough for me to take profits on it. Learning number 2 is the exact opposite of learning number 1. I tried to enter a call option right in the middle of a huge green candle, something that had already moved up 7-8%. To summarize what I did, I basically FOMO'd into this trade. I thought it would keep going up forever, and I didn't pay attention to what the chart actually looked like. Now, if this was a huge green candle that was breaking above resistance, making new all-time highs, that wouldn't have been such a problem. It might have been a better trade. However, it wasn't. We had just fallen 10% before, and this green candle was making up a solid amount of that drop. However, where I was buying was right at resistance. There was almost no room for this to move unless it was going to break through a key resistance, so this FOMO was a huge mistake. Lesson number 3 from my second week, bad contract choice. Now, the Discord group I'm in was able to really help me see through this one and understand what a good contract choice is and where I was making mistakes with this. My mistakes included buying super low volume contracts, which is a mistake I had made in the previous week. However, that volume threshold wasn't really clear to me. In week number 1, I was buying contracts with almost 0 volume, whereas this time, at least the volume was in the couple hundreds. However, there were much better contracts to choose from each time, where the volume was much higher, within just one strike price of the one I was choosing. Along with low volume contracts, I was also buying contracts with high theta values, or just contracts that were way too far out of the money, things that would have to move a very significant amount for me to make any money on them. Learning point number 4, I made multiple mistakes of buying at a major resistance point. This one's pretty self-explanatory, but 2 of the call options I made were right as we were approaching a key resistance, which I didn't have drawn well onto my chart. A much safer and better play would have been to wait for these breaks of the resistance and then enter them, which in my case would have had me not playing these at all, and thus not having these 2 losers. Number 5, looking at the volume on the underlying stock. I tried to play a couple contracts where the setup looked good, but the stock itself had no volume. When this happens, the price movement isn't enough to overcome the theta value that's going to crush you. Your contracts lose value over time, so if they're not moving right when you buy them, if they don't have any volume, you're going to lose on them every time. Mistake number 6, buying the ask on a high spread contract. As an example, I played one contract this past week where the bid was somewhere around 31 cents and the ask around 37 cents per contract. When you first look at that, it doesn't seem like a big deal. However, that's about a 20% gap between the 2 prices. So if you buy at that 37 mark and a trade goes through at 31, your price compared to the last trading price is already minus 20%. Now for me, where I play with a 30% strict stop loss, that's 2/3 of the way there in just a few seconds. This makes it extremely hard to win on a trade. And finally, number 7, I had 2 trades where I did not follow my outlined plan. These 2 trades ran about 15 to 20% in profit, and I was scared to have another loser. I wanted to avoid losers as much as possible, and so even though they didn't hit my 30% mark that I need to start my trailing stop loss, I set a stop at break even. Both of these ended up coming down and stopping me out at that break even mark, which ends up as a little bit of a loss after commission. After watching how these would have played out had I used my trading plan, I can tell you that the first one would have ran 76% in profit before hitting my trailing stop loss, and the second one about 40%. So with those 7 mistakes in mind from week number 2, how did I do and how did it compare to week number 1? Well, as I was saying, in week number 1, I lost 50% of my portfolio. I entered $100 into every single trade I took and continued that through week number 2, so I could really get a fair comparison. In number 2, I didn't have a profitable week, but my losses ended up dying down to only 10%. I lost $100 in week 2 compared to $500 in week number 1. So while this wasn't a winning week, it was a huge improvement. And I do believe week 3 or week 4, I'll see a profitable turn. Hopefully you can listen to these learnings and jumpstart your learning from it. Don't make the same mistakes I did. That's why you're here learning. However, mistakes in trading are inevitable. I would highly recommend that you do as I did, and every time you have a losing trade, write down why. Why did that trade lose, and how can you avoid it happening the next week? Oh, and by the way, out of the 12 trades that I lost in the second week, 10 of those were covered in the reasons I just listed. 2 of them were real losses with really good setups, followed my plan, executed exactly how I would have liked to. However, the market just moved against me. You have to note that these are definitely going to happen, and they shouldn't stop you from doing what you're doing. Thank you so much for watching. I hope you learned something and can take this with you. And if you did, please do like this video and hit that subscribe button for future content. This helps me out a ton, and it only takes a couple of seconds for you.